All right, guys, please. All right, Amar is here as well. One more chair? Yeah, we'll get one more chair for you, bro. No worries. Yeah, I think that means it's on. Should it be me?
Oh, I'm the moderator.
Yeah, you moderate.
All right, guys, sorry for the delay. We've got everyone up on stage right now. So without further ado, I'll pass the time over to Lou to carry on with this panel. Round of applause, guys.
Seats. Yeah. Go there. I'll come here. Yes, sir. I have glasses. You're all the way here. Tony.
So we switching seat?
Yeah, we're getting to the.
Oh, he could be me. So I was getting used to
Yeah, just sit.
Switch to our side?
I don't know.
Whatever you want.
I mean,
That
let's do it
sounds more
proper.
comfortable. You got cheating.
He's the professional.
Yes.
That was more comfortable.
Yep.
Yeah, I'm special. I got a little tiny
Where
one.
are you based?
Puerto Rico.
Oh, sweet. Did you ever go to Crypto Mondays there? It doesn't happen anymore. You heard the story of the guy running.
Oh, really?
Yeah, he had a
That's really good also.
he had a very bad. It started at Brock's house. Yeah. It rocked for a while. Okay, we ready to go? Yeah. Okay. I think we are ready to start the panel. Crypto policy, institutional adoption, and digital asset treasuries, which I think is kind of the hottest topic, of the moment. So, before we dive into it, why don't we guys, quickly give introductions?
Yeah. Hey, guys. I'm Kenny. I'm co-founder of Manta. We're the largest modular L2. We've been building for the past 5 years. I think one of the reasons why I might be on this panel is because in a past life, I was finishing up my master's at MIT, where I was the teaching assistant for Gary Gensler, who was the former chairman of the SEC. So maybe that's why they picked me to be here today.
Hi, everyone. My name is Amar. I'm the co-founder and CEO at Tashi Network. We're building a DePIN that helps run an internet without servers. And this is obviously a global topic, and we're working with projects in gaming, AI, IoT, and robotics. And this touches every country, every geography. And when you think about it, the biggest impact of scaling crypto has been linked to public policy. That's obviously have come in and changed the game in terms of how liquidity comes in. So super excited to explore how we fit in and the new regulations in place.
Before I start, can we have an operator here to manage the speaker input? Because I'm barely able to understand what others are saying. Is that the same for you? Yeah, there's a massive echo. If the operators can please optimize the incoming audio. So, hey guys, I'm Gaurav. I've been in crypto since 2015, hedge fund, VC, and building. And presently, I'm building up a multi-asset DATCO from NASDAQ. And I've been working with regulators and startups on the regulatory side for about a decade in crypto.
Hello, everyone. My name is Tony Lei. I am the founder and CEO of Now Change. I'm proud to say that we are the first one to apply the proof of mobile consensus through our mobile node apps. You can probably see it out there in the banner outside if you want to test it out. You can certainly download it, the app. It's available on the App Store as well as Google Play. What we do is we allow anyone with a smartphone to get on Change and secure the network and earn the rewards. So it's based simple term, we just make it accessible to everyone. And my whole life is about decentralization, and that's what we're working toward.
Lou, I got a question. Are all those phones right there taking?
Yeah, that is my team. We brought the whole crew
team
over here this time. You say yay!
Yay! All right, so we got 3 topics here to cover. I think the hottest one, as I said, is the digital asset treasuries. So real quick.
I pushed it to the organizers.
Each one of you, Tony, will start and come back this way. Where are we in digital asset treasuries? Is it still the beginning, and is it going to go up, or have we already peaked and it's coming down?
Say it again, like
on the whole digital asset treasuries, right? They trade at MNAV, right? Multiple over NAV, and they peaked a while back and they've been coming down. Is that a trend that you think is going to continue, that it'll continue to fall, and a lot of these are going to fall below 1, or do you think that we're just in a lull and it's going to come back?
I think Treasury is the term that we use pretty normal in the sense of any TradeFi in the past years and even decades. Treasury is becoming more and more prevalent. It's not going to go away. So if you, along the way, now you're going to see more and more companies will apply that. Same Treasury, what can I do with, they're putting on, have you heard about Bitcoin digital asset? And then now you got Ethereum, you got everyone else getting on board. So you say, hey, I'm going to put Treasury on top of that. So I think it's not going to go away. I think it's going to apply more and more to daily use now. So,
yeah, Gaurav?
So I have two perspectives on this. One is, what does a digital asset treasury mean for people? And what does it mean for a token company itself? We call them foundations most popularly. For the token foundation, a company that has issued their own token, no matter for what reason, of course, which is not a security, it is their access to institutional liquidity. Why would I say that? And my most favorite example on this is practically everybody who has a token wants to get listed on Binance today. And why would you want to go to list on Binance? I mean, Binance isn't promoting you. Binance isn't doing anything except listing you. And merely listing there, you get to a few hundred million, if not a few $1 billion of market cap. And the property of the exchange is that pool of liquidity that gets you to that success. Right? I'm trying to frame it super simply. So you want to get to Binance because it's the largest pool of liquidity in crypto, and merely being available there gets you that value, right? And everybody's targeting for that value. And that same thing applies for OKX, Bybit, whatever is the chronological order of liquidity in crypto. Now think about a multi-trillion-dollar liquidity market, which is the capital markets of the world. Why wouldn't you want to be available in that pool? Because even if a fraction or a stupid fraction, not just a normal fraction, let's say a stupid fraction of that multi-trillion-dollar liquidity pool would fall onto you as a drop, you're doing already brilliant and much better than others. So that is something that every single token company should target. More so, treasuries are also emerging as the new, DAT treasuries, DATs, are also emerging as the new corporate structure of a token. So if you remember from a silly, non-regulated entity in BVI or Panama or Liechtenstein or wherever in 2016 during ICOs, we have come all the way to Swiss foundations and associations. And so we have evolved in crypto structures given the complex form of the instrument we have. You can't have a for-profit entity and whatnot. So we have evolved in corporate structures. And I know I might not be relevant for a lot of people here because I'm only talking to token companies for now. And so being a public company is a new evolution of that corporate structure. Why wouldn't you do that? You have like so much more expanse and expand, but more than that, so much more institutional trust for your company if you're a publicly traded asset, right?
Well, not to be counter because I'm very positive, but I think one reason not to do it is because less than 1% of all listed companies trade in the U.S. trade on a given day. It's actually quite easy to be public. Just like with tokenization, anybody can tokenize. The hard part is the liquidity.
So I'm only covering the macro. I'm only covering because it's already been a monologue for the last 3 minutes.
Yep.
I don't want it to be a monologue for 20 minutes, right? So I'm just covering the macro. Of course,
there are
a zillion arguments and counter arguments to this.
Okay, Amar.
So that's one.
Yeah, let's.
Yeah, that's one for token projects, and the one for retail is super easy. Why would anyone want to miss out on the future of finance? They've already missed out on Bitcoin. Bitcoin is at 100K. Ethereum is doing pretty well. Crypto is a $4 trillion market. Isn't that a massive loss for the global macro markets that don't have a institutional regulated access to crypto? Why wouldn't you get into a DAT? So those are my 2 points about two industries.
Thanks, Amar.
I think you made a very interesting point, right, which is not everything trades. And if you look at the volume that Bitcoin gets and Ethereum gets is nowhere close to what the 100,000 coin gets. And that's why you've only seen the top 10 coins go the DAT strategy. Now that is changing significantly. Like Aether announced publicly today, it's been in the brewing world.
Aether just did an
AETHIR. Yeah, they just announced with DNA House that they're doing a DAT, kind of have commitment of 350 million. So you're seeing people going down the pecking order already. And it's not necessarily about being public, but I think it's about how do you, A, get access to the pools of capital, two, how do you make sure
that's important, right? I mean, I think that's what's going on.
Exactly. Because these companies have raised money only from crypto investors before this, right? Now, if you're a AI, DePIN, robotics, any company like that in crypto, you want institutional money. How do you get institutional money? You go to NASDAQ, right? You go to Wall Street and every other regulated market in the world. So I think then there were two parts in your question. So I think this model in itself will continue forever. Will the NAVs be higher or lower is going to be the interesting part, which is, I think, part of the second part of the question you asked, right? Because when the model started, it was novel and the NAVs were much higher than, and you saw that MicroStrategy, and that's starting to go down. I think it will find a mean in the middle. Now, how long that takes, that's anyone's guess. So it's about finding alpha right now and saying that this is early. I think most of them in this bull run will have trade over on average. And then, when the bear run comes, they'll all trade under and then probably find a mean, as does most assets in the world.
Okay, and Kenny?
Yeah, I think I'm more on your boat, Lou, right? Like, I think there's a time and a place for everything. Objectively, yes, we're early because a lot of these sort of like the trend around DATs has really started this year. But I think a lot of these projects that are pursuing these DATs, right, I think it's very dreamy to assume that you list on the NASDAQ and all of a sudden institutional money's just like, oh my God, like that's not how it works, right? Like the people on the institutional side are much more risk averse than the people on the Binance side.
Turns out.
Yeah, so like that's why they don't even touch anything beyond like Bitcoin or Ethereum right now, right? And to just think that, oh, once we launch a DAT, everyone's going to touch my altcoin, like I think that's a bit naive. And so I do think that there are going to be some DAT success stories, but as the volume continues to drive onto this listing, those success stories will become fewer and far between, right? Like Aether, I think, was an example of something a little bit more positive. I'm not going to name any names here, but I think the news recently came out, I think today or last night, that there was this other company that was trying to raise around 400 million for their DAT and so far has gotten about 13 million in interest, right? And so like it doesn't just magically work like that, right? There's a time and a place for everything. And if your project, your token is not working, like focus on that and make that work before you decide to,
the token's not working, let's do a DAT.
Yeah, exactly. That's exactly the path you don't want to take.
Okay, so the second topic was institutional adoption. So yeah, I think the most interesting thing about institutional adoption is where is it going to happen, right? Are these guys do you think, going to build their own chains? Is it going to be Ethereum, Solana, somebody else? How do you think it's going to go?
Yeah, institutional adoption, that's a broad term, right? Like, I mean, what does it really mean? Does it mean Goldman's coming in to build their own L2?
Okay, that's fair. Let's talk about just from, I think, the U.S. market being, I think Gaurav pointed out, is a dominant market in the world. So, for institutional adoption in the United States. Yeah,
I think at least for the next 1 to 2 years, institutional adoption means buying Bitcoin, right?
I'm sorry?
It means buying Bitcoin. Right, like beyond that, yeah, sure. There's like Ethereum ETFs, which has a fraction of the volume of Bitcoin ETFs, which kind of already sort of indicates the interest for institutional appetite beyond Bitcoin, which is not really there yet. I'm sure it'll get there in the future, but right now, like to think that the projects in this space building DeFi protocols or like SocialFi or all this stuff are going to get institutional adoption is again a bit naive. Right? Because the first thing that if you talk to a chief compliance officer, right, like it's not like a crypto partnership. I can't just be like, hey, XYZ chain, right? Like let's do an announcement on Twitter. That's not how Goldman works, right? Like you have to get the buy-in of the chief compliance officer. You have to get the buy-in of the risk department. You have to get the buy-in of like all of these traditional finance people that have no idea what the heck your token does or what the heck your chain does, but they also have no idea where your users come from. And so as soon as they think, oh, there could be North Koreans touching this, are they going to play with your token, or are they going to try not to get fined billions of dollars, right?
Yeah, pretty sure they're going to want to avoid it.
So I think two kind of key areas here, right? One is which institutions are buying digital assets, which is kind of a continuation of this one. I think now over 1,000 institutions have, the biggest US ones have bought some digital asset and are holding it in their treasury, and I think that number will scale. But the other institutional adoption is just those companies using blockchain as an underlying rail, right? And even on that side, I think the biggest use case that's been proven has been stablecoins. Right now, there's 90 plus countries that are exploring CBDCs. There's 120 billion plus flows in ETPs overall. So
yeah, what about plasma?
I mean, it's just endless, right? Like, so you would say that any payments business will get disintermediated by blockchain technology over a period of time. And because regulations are coming in...
Why does it have to get disintermediated? Why can't it adopt it?
Disintermediated,
I mean, you think Goldman's going away?
No chance. What I mean is disintermediate what they were already using. So the company doesn't need to go away, but the technology is evolving. So when you adopt, then there will be other parties that Goldman works with. Say Swift will probably feel some effects of this, Visa, MasterCard a little bit. All these guys that are running the payments rails, they will be the ones actually getting disintermediated, and the ones who are customer facing will decide what's the underlying technology. So all these banks had been building blockchain tech for a long time. Now that regulations are in place, they can just accelerate that process. And I think that's why we'll reach a world where people don't talk about Web 2, right? It'll be just blockchain is what is the technology. The average person who's a non-tech person has no idea what's happening underneath. You just, you send money via Swift in Singapore via PayNow. It doesn't matter how it happens. And I think that's what's going to be the future where your right now, your private key, which is complex, will become a simple thing, and you just transact via that. And I think that's going to be, in the next 5 years, very commonplace.
Yeah, that's the dream. Gaurav?
Yeah, so I always sort of want the panels to be entertaining, and entertainment comes from spicy conversations, and so I already see the spice between me and him. Also in the character, because I've been a VC for about 17 years, and my life and thought process is based on this intrinsic optimism in the society. While I don't blame him for his perspective, working with Gary comes with a few perks, right? So, so having said that, I'll actually, that was all the spice I had to add, because the rest of the things I actually had to agree to him, which is the DATs can't be your argument to success. The first thing you have to do is make a working token, make a working project, and then have a working token. But we cannot deny the fact that as a business has to work as much as on their tech, if it's a tech business, as much as on their marketing, as much as on their HR, and maybe even on the cleanliness of their office space. These are all independent divisions that the company has to take care of. And so you certainly cannot deny the attraction of public or private capital into your token being a utility and a financial instrument, right? So I am not referring or touching the different aspects or all accumulative aggregated aspects of a business. I'm only touching upon the capital attraction aspect of a financial utility. That is an intrinsic part of your business, having a token. So you do want to do your best to get to the best pools of liquidity. Now that does definitely means that there are dead tokens on Binance, to stick to my example and analogy, and there are definitely hundreds and thousands of dead companies on NASDAQ, right? So there is no explanation for a shitty company with a shitty business to have success just because you're in the right pool of capital, right? So first of all, I like in absolute agreement. Now, touching upon the second part of institutional adoption, and again, sort of bringing the topic to this conversation, the previous topic to this conversation. Ripple was registered in the state of Washington State in Seattle in 2012.
I'm sorry, what was?
Ripple, yep. Yeah, in 2012. Until 2016, it had only one POC with one bank, okay? And that was when Ripple was, 16 cents. And then they played the whole, wrong statement. For some random reason, they they pumped from 16 cents to $2.50. Sorry, $3.2 in some exchanges, $2.50. And they went from some $100 billion market cap to a few tens of billion dollars of market cap.
Yeah.
And again, as if it matters for some people, it went from that one bank POC to 130 signed bank POCs around the world. I don't know if it has a correlation, but your valuation does matter. Your liquidity matters. And I can bring 110 other references of Ripple actually correlated to that liquidity. So do you think this Goldman guy that you were just referring to, who has no idea who the fuck, whoever you are, who the F you are, will give more Fs if you are a $10 billion company, or will he give you less Fs if you're a $10 million company? I think
yeah, we know the answer to that.
You know the answer, right? So I'm referring as an innovator, as an investor in innovation and forward-looking industry, and forward-looking humanity. What you can definitely do is build a great product, build a great business, but let's not forget the public-facing aspect. It can be marketing of your product, but also marketing of your stock.
Yep. So Tony?
I think all of you touch a good point on as far as adoptions-wise. Kenny mentioned that adoption doesn't mean bankers are going to jump in and give you loads of cash, and it doesn't really work that way. What it means is what we see in the traditional finance guys. Now they want to get on. You say, hey, crypto used wisely, but can we use blockchains to do something better? In terms of, now you got asset managers, you got, sovereign funds, you got all different type of people say, you know what, let's get on board with that. But now how do we get on board with that? What they require is something that they have done for decades and decades. They want risk management. They want infrastructure. They want something that, hey, build something, don't speculate anything. I don't want you to speculate your coin's going to worth $10. Like he mentioned, Ripple went from 30 cents or 16 cents to $2.50. How does that happen? They demand something
Talk to me about it.
Well, actually, to this date, XRP is not actually used for cross-border settlement on Ripple, right? It still
Back then, there was a product called XRapid that was the liquidity layer based on that token. Now it has been excluded for regulatory reasons.
So, I mean, in that term, there's a lot. If you want to talk about adoption, that people are adoption, then it's going to relate to the banker say, hey, what have you done? Show me that. That's what it means for adoptions. I mean, if you got that, settle out and figure that out, adoption will come a lot sooner than what you want it to, so. But other than that, just to cut it short, traditional finances come to play, but they want more than what you can show them, so.
So moving on to our last topic, which was crypto policy. In my view, I don't spend any of my mind share on the government. I think two simple facts: the government is not our friend, and tomorrow it's going to be worse. That's it. That's all I think you need to think about it. But obviously, a lot of people in crypto spend a lot of time. I think Coin Center is doing God's work. But I think ultimately these guys are not our friend. They're never going to put any Bitcoin in their Bitcoin treasury. But that's my opinion. Where do you think we are with crypto policy?
Crypto policy is a tricky question too. A lot of crypto, like I think all of us, we don't want to be controlled. Period. Simple as that. That's my stuff. I wanted to do whatever I want to do with it. But then again, if you want to grow crypto policy, then, along the way that I've learned is policy is create rules. And once you have rules, it doesn't mean you stop innovation. It just allows you to grow within the framework. So that way, safe for the investor. So if you look at it, it's the event today. If you think of a road as you drive on, if there's no guardrail.
Well, but it's a question of balance, right? The more you protect the consumer, the less freedom the consumer has. So you want to stop people from buying stuff because they don't have enough money, right? That doesn't seem to be reasonable.
Yeah, you got to find that balance somewhere there. You don't want people to come in and say, you know what, I'm going to take the old economic system or the old system. and apply it to the new system. So you got to find that balance to make it work, you know. So.
Gaurav, see if we can keep it under a minute.
Done.
Thank you.
So I think the biggest change that we've seen is crypto's gone from everybody asking if to how, right? Previously it was like, when will this become mainstream? And now it is confirmed. And if you just look back at the last 6 years, right? 6 years back, Hong Kong was pretty much more of the crypto capital with all the big exchanges there. Then with a lot of the unrest there, Singapore became the crypto capital because they were still gray, but still welcoming people with open arms. And Dubai, Abu Dhabi became the crypto capital because of regulations. And now New York is kind of becoming crypto capital, right? So the regulations definitely are the biggest driver in this space. The US being the biggest market, obviously.
You think regulation is the biggest driver in this space?
Isn't that a direct correlation? Like just plot it on a graph on a month-to-month basis. Period.
Yeah.
Country-wise, go as micro as you want. Just plot on a graph.
I am here because it doesn't matter what the fuck the government does.
No,
we can buy Bitcoin. The government can tell us we can't.
Do you want
still
your
do it.
Bitcoins at $100K or do you want them at $10?
So
The government, it was the greatest asset in the history of mankind before there were any regulations.
agreed.
But the reason it's getting to value and you want them to get more value is it's getting more adopted and it's getting
The
more
way you
adopted.
get more value is you get more people to want to buy it. If the government tells you you can't, a lot of people go, wow, it's probably a pretty good thing if the government telling me I can't do it.
So the community-wise, you know, you got to get that involved. Anything, you got users, you got more people into it, you know. That's gonna
There's your
drive up.
spiciness.
I am here to add, I'm a red
I thought you were
chili in
done.
blue suit.
Yeah, I think it depends on how you look at it. When you talk about 8 billion people in the world, you want governments to be involved because then
Of
you're
course,
opening it up.
of course you want them to be involved. You want them to be. But ultimately, Bitcoin is not good for most governments in the world unless, you know, small governments can adopt it. The U.S., you know, to the degree, right, the U.S. needs people to buy dollars if they want to buy Bitcoin instead. The U.S. is in big trouble.
Yes and no. I mean, like, they obviously will want the US dollar to be the most dominant thing, but now that they've seen what a big force Bitcoin has become, they don't have an option, right? So they can keep sitting on the sidelines, but they've taken an active stance on this and said, we'd rather get a piece of the pie than sit on the sidelines and let the dollar get decimated, which was anyway happening. So you're kind of seeing they are evolving with times rather than going hard, which is great. And I think that's what people are saying is going to happen in China next. The government is already exploring what their regulations will be. And imagine that happens, that changes the face of how the world looks at cryptocurrencies. The two biggest economies in the world open their arms towards it. That explodes not just Bitcoin and Ethereum or anything on the top. It explodes the opportunities of altcoins. And I think that opens up that if we're working today as a DePIN project and I want our project to be relevant for 8 billion people, then I want all of them to think of us as a regulated asset and a thing that is good for them. Right now, the first question you ask when I speak to a lot of folks who are not...
So you didn't buy Bitcoin until it was regulated?
No, I'm not talking about myself, but I want a bigger audience that exists right now. So I bought Bitcoin because I believed in an upside. Now I would like more regulation because I want my token to go up. So different times, different reasons.
I think, like, you know, we can debate about whether regulation is good or bad all day, but at the end of the day, it's, I think, becoming inevitable, right? So it's not a question of whether it's good or bad, but a question of how do we drive that in the way that can still preserve some ethos of this whole philosophy of decentralization, which I think is a super fine balance. And that balance is...
Sorry, you think is the...
It's a super fine balance that is very much being tipped over in, I guess, in favor of driving more value into Bitcoin, right? And so, like, at the end of the day, right, like, will most people say, oh, I don't want more regulation and I'd rather Bitcoin stay at 150K? Or do I want more regulation and I want to see Bitcoin at $1 million, right? I think, like, it's probably not a question to most people in the audience that they'd probably want to see the latter.
So, I mean, again, so your belief is if there are no regulations, Bitcoin stops at 150,000 because nobody's going to want it unless the government says it's a good thing because the government knows what's best for us.
I think there's going to be regulation either way, right? That's inevitable.
Of course there's going to be regulation.
Yeah.
That, you know what regulators do? They regulate.
Yeah, I understand.
It's in their job title.
So because regulation is inevitable, right, then I don't think the question should be whether or not there should be, but rather how do we conform to that in a way that still can preserve that self-custody aspect of crypto that we all know and love, right?
But it sounds like you'd be happy getting rid of self-custody and outline self-custody as long as it's regulated.
No, I'm not.
People...
I'm the opposite, actually. I want self-custody, and I think that there's a regulated world that can exist with self-custody.
So you only want regulations that will be helpful.
Of course. Why do we want the bad
But
things?
have you heard of regulators and what they do? Do you think
I
what
worked with
percentage
one.
of regulations?
I don't know
What
if I-
percentage of regulations do you think are helpful to humanity?
So I'll give you an example of this, right? Like Uber and Airbnb, right? Like these are two technologies that drove adoption way faster than regulation could catch up with. And as a result, regulation had to work around these technologies, these businesses, in order to make it so that they can still survive in their own way while also not disrupting the existing flow of business. But inevitably, it still did, right? Like New York City and Uber is like a perfect example of this, right? Like all the taxi drivers.
I'm sorry. You said they worked around. They broke the law. They didn't work around it. They broke the law.
There was no law.
Oh, there were laws. There were laws. You can't, and nobody can just go around and pick people up.
Sure. But I mean, if you were to say that about crypto, right, then you can say there are existing laws in crypto because they're already in traditional finance as well, right? Like by that same right, it's kind of analogous.
Isn't that what your former boss said?
Yeah, it is. And you know, like that's a whole other debate that I
Yes, it is.
But the point is that like the innovation happened much faster than the regulation could catch up with. And as a result, now we have a world where Uber can coexist with taxis. Now we have a world where Airbnb can coexist with hotels.
Coexist. Have you seen the price of medallions in New York? They wouldn't call that coexisting. They've been crushed.
Sure, but I mean, you could say the same thing about AI as well. But do we want to stop AI just because it will do some damage in the meantime, right? So I think like that's the cost of innovation. But as long as the innovation and the drive and the adoption is there and continues to outpace the regulation, then I think regulation will work its way around the innovation rather than taking it completely over. And so I'm hoping that in this fully regulated world that we would still have to have that essence of self-custody, because then all of a sudden we just become traditional finance again. It's TradFi 2.0.
Yeah, exactly. So does anybody know, is there any country that, you know, and again, I've said I'm not an expert, that, you know, this is a country that's doing, you know, crypto policy right?
I think the Caribbean islands are doing pretty fine.
Take as long as you want.
Sorry?
Take as long as you want.
Caribbean islands are doing pretty fine. But then coming to a baseline, and this is me going back to my my meditation teacher and you know my spiritual side. I think everything in life has to go full circle. You just can't let life be unlimited, and so you need death. But of course, nobody likes death. And similarly, regulators are not essentially all that bad. You need the right check on innovation before, you know, it starts to hurt, like meme coins. And sorry,
we're going back to square one. So who's right? Who's
so
wrong?
it's the necessary antimatter. It's a necessary antimatter that sort of regulates innovation for it to be useful for masses. For masses is the key word, because intellectuals.
I'm sorry. What word?
Masses. Okay. So you don't want people to keep forking Bitcoin. I'm going back to the 2012, 2014 references and call it Bitcoin Black, Bitcoin Alpha, Bitcoin Shield, Bitcoin da-da-da-da-da, which
Don't forget Bitcoin Silver.
Yeah, Bitcoin Silver, whatever. All those folks of Bitcoin had to stop. And then, you know, so you need people to regulate that, because probably 99% people on the floor don't even know there was all these Bitcoin folks. And you probably know Litecoin and Dogecoin that eventually survived through that. And so similar things, and you only thought this would get worse, it would get better, but it only got worse with ERC20. So you had poop coin, shit coin, and whatnot coin. And like, my best day in crypto was the day I found out a website that said, I am raising an ICO to buy myself a house and a Lamborghini. Well, at least I'm true, and so you should pay for my ICO. Like, that is how crazy it went. And so you want somebody to check in, and I don't have to tell you the tale of NFTs and meme coins. Somebody has to come in and save the newcomers, the boomers, both of them actually. I think regulations are good. They bring in the right checks so that the money can flow into blue chips, good companies.
Yeah, I mean, I think we forget in terms of history when we look back. Compare crypto right now with the 1930 stock market, not the
I'm sorry, it was what?
the 1930 stock market, not the 1990 stock market, right? And that was the evolution that it had to get to where it is today. And people are looking at them side by side because, the market cap is growing, crypto is close to, 3.5 trillion, and they're like, wow, like this is catching. But you have to look back in history in terms of how the stock market started, how much time it took to evolve to reach a spot where the average person could trust what they were doing. And I think trust is a very key word when you're going to the masses. And the trust, fortunately, unfortunately, and that's why we live in countries, we choose governments, is because they help provide that trust. And that trust factor, good or bad, allows the average person who is not as aware as the savvy investor to come in and say, I'm willing to take this risk in my life. And that's why I think regulation is critical, even though sometimes not ideal for, folks who are more risk savvy.
Okay, well, look, this has been a fun panel. Thanks, guys. Let's give them a big hand.
Thank you
Thank
so
you,
much.
guys.